Oh, I gotta pop out my chat. Happy Saturday, ladies and gentlemen. All right. What's up, Aram? Good morning. What a week. Holy crap. Talk about crypto, and then we'll dig into metals, we'll dig into gold, we'll dig into silver, we'll dig into what happened, and we'll dig into how to do better next time. If there is a next time. Probably will be a next time. Whole dollar devaluation trade. Like I said in the newsletter, it's like, yeah, I don't know. Not sure about the whole dollar devaluation thing right now. So yeah, it's tough. I mean, we're not macroeconomists. Even the macroeconomists don't know what the hell is going to happen day to day. That's the whole thing, right? The macroeconomist people, they're like, oh yeah, well, stocks go down, bonds go up. Bonds go down, stocks go up. But they can't tell you when. They can't tell you how to make money on that. All they can say is, well, you probably should have some bonds because, that way when the stocks go down, the bonds go up and it kind of balances out. You're like, yeah, I guess that sounds pretty good. But then what I've realized is that by not specializing, you don't get a good anything. You don't get a good return. So we do try to attempt to time the markets. We do a pretty decent job at it. We are not perfect. I can't even drink water perfectly, apparently. Get out of here, little ice cube. So that's it. We do the best we can. And man, just the more experience I get in these situations, the big picture becomes fairly clear, although timing it obviously is not that consistent. Or I should say obvious a lot of times. What up, Mexican Charlie Lee? Well, all I have to say, if you guys have been listening to me for any amount of time, the only thing you can do is react to the market. That's all. If you removed the news from my view, I would do just as good probably. I would argue it's good to know that AI is the new thing. It's good to have that backdrop of information, but it doesn't matter. It doesn't. I still take all the cues from the charts. Does that make sense? So, it's just one of those things. Yeah. Let's get to crypto. If anyone wants to focus on crypto, please definitely call it out. And we'll definitely look at some names. We'll look at some potential opportunities, mainly obviously to the short side, because the market looks like it's just starting to break down. We broke the other day, and it looks like we're trying to follow through this weekend. Bitcoin has broken down from its bear flag. Little breakdown, retest, then the actual break, and then now it looks like we're attempting to follow through. Could we get a bounce? Yeah, we can get a bounce, but it does look like a lot of momentum has just been sucked out. And with what gold and silver just did, like where's the momentum coming from? It just doesn't make any sense to me. What makes sense to me is either shorting or just standing on the sidelines. In reality, I mean, if you're looking to short, your stops are going to be any prior high, this high, this high. Usually, if we get an extreme down move, even these 2-hour highs are mostly respected. I'd say 80% of the time respected. But yeah, I definitely think the bias is to the downside. You just bought? Well, I don't know. Based on what you said last time, Mexican Charlie Lee, you shouldn't be doing what you think you should do. So you should probably be rethinking strategies if what you said the other day was accurate. Yeah, so market on the way down here a little bit. Definitely looks like it. Moving averages are rolled over. The trend is definitely stalled. There's no 3K. No, I'm with Mike. I think we targeted 50K. We have it on one of these other charts, I think. Maybe not. Oh, what's that? Look at that one. That's interesting. Oh, look at that. When did we put that one on there? I don't even remember doing that, but it looks like we got it right. at least ish. I do not remember when I put this on here. It must have been after the top. It was before the bear flag here too, because, oh, you know what? This was when we were, yeah, this was when we were talking about the Wyckoff top and potential breakdowns, I guess. Yeah, so if you, oh, that's interesting. Aram, do you remember when we did this? If I make this match the bear flag, this is not going to look good. Oh, 57K, kind of right down there again. Whoa, look at that. Wow, that's like bar for bar, son. I made this low basically match. I mean, just eyeballing it. And we're look for a bear flag coming up. This is a pretty good approximation. Okay, there we go. So there's when the low hits. The other one was just me eyeballing it. That one's a little more aggressive, but this one, if I make the move the same, it took less to go down, took a little bit longer. Maybe we won't quite go all the way down there. Wow, you did a pretty, I think that was Mike. I think that was all Mike, whenever Mike shows up. The thing about buying dips, I'm not a hater on buying dips under certain circumstances. The point is to know what dips to buy. So here's the thing I think a lot of people miss when it comes to trading. I need to write a book or something. I really do. I don't have all these thoughts fully formulated, but all trading comes back down to basics. Okay? All trading comes back down to the basics. Everything you initially learned about trading, if you become successful, you'll eventually use all of those strategies / sayings, whatever you want to call them, in your trading. The problem is people misconstrue those strategies and employ them at the wrong time. This is not when you buy dips. Okay? You buy dips in this uptrend. Okay? You know, say the market's been dipped. Like right now we could be here, right? We could be right here, and I think that's actually what that is. You start buying the dips when you stop dipping. Like this is a capitulation candle right there. It's not the ultimate, but it's a good one. That's a type of capitulation candle. You can buy that dip. You can buy once we go back up, maybe you start buying these dips a little bit. On the way up, you buy these dips. You know, until we fully break the trend, once we've chopped here for a while, there's a certain place to buy dips. I don't think you do it on every dip because there's a lot of dips. What do you consider a dip? Well, here, you know what? I will use my breakout strategy here, and I will show you all the swing highs and swing lows on the chart. And what do you consider a dip? And I probably should swing lows, swing highs. Okay, so those are the swing lows. So those would be your dips. A swing low, by definition, is a dip. So which of these dips are you going to buy? There's like 700 of them. There's swing lows all the time. You know what I mean? I would argue after when you get the market in a general uptrend, you buy the dips, or I will say if you're a patient trader, if what you're trying to do, because let's talk about strategy. What are you trying to do when you buy a dip? Honestly, what are you trying to do? Seriously, Mexican Charlie, I'm gonna call you out here, bud. Answer the question. What's your goal? Your goal is to buy low so you can sell higher, right? If it's something other than that, let me know. But I'm pretty sure that's going to be what you're going to say. So, if your goal is to buy dips, it'd be nice if you chatted because, you know, it's like a one-way street over here. If your goal is to buy dips, buy the right dip. Buy low. Okay? Yeah, we're public. Yeah, I screwed it up again. It's okay. Anyway, so what I was going to say is that on the way down, you don't buy on the way down. You especially don't buy this little blip. This isn't a dip. This is just a little blip. Okay, accumulate more coin. Fair. See, that's what we want. Exactly. You want to get to the strategy. You want to accumulate more Bitcoin. The best use of your dollar then, and see, here's where technical analysis comes into play. Technical analysis, I honestly believe, is everything. It is everything, okay? Because you can use technical analysis in a number of ways. So not doing what I do and doing what you do, okay? You can use technical analysis to your advantage. So what do you want to do? Well, what you want to do is when we're breaking down, I'll get to more kind of current situation, I guess. When we're breaking down, right, what you want to do, oh, log scale screws that up, doesn't it? Okay, I'll take log off, I guess. What you want to do is you want to wait. Your money will go much better at 60,000 than 80,000, right? You'll be able to get, what is that, 25% more coin. If your goal is to buy more coin, use technical analysis to buy the most coin you can buy. All right, I just want you to get what you want. That's all. I'm not trying to be smart. I'm not trying to, whatever. I want you to get the most coin you can get. So not every dip is buyable. The right dips are buyable. The right dips are buyable. I'm actually trying to get my average render price down since I bought way higher than here. What was it got to do with Bitcoin? Are you talking about the render? You talking about actual? You bought the render dip then. Why are you so hard up on render? Why you guys stick to one coin? Yeah. Yeah, see, this is the problem with averaging down. I mean, it'll probably have another rip at some point, but the problem with averaging down is that it's such a long game. Sometimes it can be years in the making, you know? Like if you bought render over here in 2024, which maybe you did, I don't know. You said it's higher than here. So I'm assuming it's in 2024. You're already 2 years in. Why? Why hold that long? What's the advantage to that? I don't understand. And especially if you're watching my content, if you're, I do not do like long-term swing trades. I would say this: if you want a long-term swing trade, well, I think the move here is either shorting or doing nothing. In reality, yeah, I do nothing. I really don't participate much in the short side. Yeah, as I probably will at some point, but in all honesty, there's no breaks to the markets, so why give yourself more work to do? If you can be successful in these up cycles, these are your days off. I mean, come on, it's just I'm sure a lot of you remember like the 2017, 18, 19 years when it was 24/7 alerts in the middle of the night. I mean, I'm 46 now. I was 40 when that happened. I was over it when it was happening. I'm not 25 anymore. I was over it. I need a break. I'm just, my brain needs a break, and I still think about the markets, and I still think about strategies, and I still do these shows. But, after this, I need a break. So my break is my break is when the market's going down. I don't need to participate when the market goes down. I can participate if I actually choose to, but I would rather focus when the market goes up. That's what I'm doing. So, but yeah. So if you're trying to buy a dip, the crypto run was not what everyone expected. That's why most held alts so long, expecting an alt season that never came this time. I think the problem there. So I actually believe words are really powerful. I really do. I said something yesterday. I don't remember what I said, but it was the words that I used. And I was talking to my wife, and she could give two shits about trading. But I was talking to my wife, and I said, "Man, I just said something really powerful there." And again, she has no context nor gives a shit. I said the word reacted. I didn't say the word because I was talking to my neighbor, and he's a trader. Everyone's a trader nowadays. And I was talking to him about silver before silver topped. What was it after? Maybe it was the day silver. This is the day silver topped. Yeah, it was the day silver topped. I told him I live streamed it. I'm like, yeah, dude, go check it out. Let me know. And I told, and what I said is like, dude, I just reacted. Like he said, you called it, is what he told me. He's like, you called it, and I said, I didn't call anything. And here's a stark difference. I want you guys to take a second and interpret this in the way that I'm trying to tell you to interpret it. You can say I called the top, and people say, he's like, oh, you called it. I'm like, did I though? I'm just gonna go to the silver chart. It's like, did I call? Like, what's a call? Like to use that term, as the guy calling it, I guess maybe it's different from my perspective than your perspective. I didn't call anything. I looked at a chart. I laid out potential possibilities based on historical things that have happened in the past. And I had 4 targets for silver. It's not like I called these. I didn't say it's going to top at, 109.83. I didn't say that. What I did is I said, we're in a parabolic run. I'm going to stream and maybe we'll sell the top today. That's it. Like, is that me calling the top? No, I didn't call anything. All I did was react. All I did was simply react to a situation that was happening. And I did it in real time. And I was able to do that because I've just done the work. I'm not going to draw all the lines again, but I was just able to do that because I did my work. I did my homework, and I just reacted to what the market did. If the market didn't sell off, I wouldn't have sold. You know what I mean? Like, I didn't call anything. And then it did, and after I sold it, I went through the prior silver scenarios, and I said, there's a possibility it goes back up again. These are all just probable things, guys. These are all just I'm not a super genius. I'm not this, that, the other thing. I'm not anything. So, here's the last silver in 2011. Do the exact same thing. Kind of a high volume top. Doesn't look like a sell. This doesn't look like a sell. And then it comes up again, and then it rolls over. It made a slight higher, and then rolled over. It's very analogous to what we just went through. I go through that to come back to Mexican Charlie Lee's comment. Well, it could have. Yeah, it could have, right? It could have. But again, all we do is look at potential futures and we say, okay, well, what if it does this? What if it does this? Hey, what's up, Mike? We say, what if it does this? What if it does this? What if it does this, right? We look at these futures. We try to prepare because in the moment, it's hard to do the right thing if you haven't done your homework. So all we do is our homework. We lay out potential futures, and then that's it. That's it. And then we just react after. It's just reaction after preparation. So I'm going to bring it up here. I don't know if you guys can probably see it or not. So crypto run was not what everyone expected. These are 2 key words here. Okay, for me. And then he says that's why most held for so long, expecting alt season. That never came this time. And yeah, it didn't really come this time. We did get an alt season, but it was very brief, very vertical in the few names that ran. But the whole point is everyone expected. Expected isn't reacting. You're pre-acting. Right? You are pre-acting. You're not reacting. The point is to do the homework, and then you have to trust the homework, and then you have to react. If the moment never comes, then there's nothing to do. And that is trading in a nutshell. When the moment comes, you do the thing. If the moment never comes, you don't do anything. I mean, that in a nutshell is trading. So, when people say, okay, we're going to get an altcoin rally and I'm going to go buy a bunch of render, that's a gamble. That is a gamble because trading is not gambling. Trading is reacting. Seriously, that's it, 100%. Trading is reacting. It's nothing else. It's preparation and reaction. That's it. That's it. It's preparation and reaction. So if your strategy, going back to the dip buying thing, if the strategy is trying to buy more Bitcoin or more render on the way down, you wait until the price and volume and technical analysis tells you that we're basically done going lower. Maybe we just crawl sideways like this, right? And maybe you accumulate in the latter part of this. Maybe you wait until this, somewhere down here. I mean, I don't know. Just, pick your fucking point. But you don't like render and buy it here and then hold. I think that's dumb. I think this is very foolish. I don't think this is wise at all. You know, you like, who the hell's calling me? And my wife's calling me. Hold on a second. Apparently, she forgets I do shows on Saturday mornings. Um, yeah, so I have different trading strategies, and I have companies I like a lot. Let's go ahead and look at them. I actually have them on my list here, even though they shouldn't be. Well, one now should be. The one we cover all the time is Backblaze. I love Backblaze. If you guys want to do, if you guys want to do whatever Backblaze does, I'm just going to plug them. I love Backblaze. This is a great. Just the company itself is great. Cloud storage that unlocks innovation. They do desktop backups. They do cloud storage and computer backups. Unlimited data protection, transparent pricing. I love these guys. 100%. Use their product right now if you need a desktop backup. I have them. They're great. Their interface kind of sucks, and so does their stock. Their stock is just if but if in your hearts of hearts you wanted to accumulate Backblaze, yeah, you do it down here at about the $4 level. That's where you do it. You accumulate at $4 because the market's putting in a bottom. If it breaks $4, you just have to exit because you're a rational human being. All right? Just use technical analysis in wise ways. Don't just randomly do shit. Please don't randomly do shit because then you just randomly lose money. And if you randomly make money, good luck keeping it because you have no idea how to keep it. All right, and the other one is Bloom Energy, which we recently added, fortunately. I like Bloom Energy a lot. This is just a cool company. But this company also never did anything. And it IPO'd in 2018, 2017, and I forgot about it that I'd missed this whole run, which is fine. But if you really love Bloom Energy, accumulate near the lows. Don't just randomly buy. Like the guys that buy once a month, I guess that's okay, but I think it's foolish. I think if you even know about me, you know something of charting, use it to your benefit. That's all. Know when the lows are kind of low and they're not breaking lower, and then you can if it's up here and you break out and there's some trading tactics to be had, but for the most part, do things smartly. That's all I got. Just do things with purpose, on purpose. That's all. All right, I'll jump off my high horse on that one. It's dead because I've beaten the horse to death. And let's get on with the show. Market shows the big money is there. That's why we start trading everything had this season. Looks like crypto season not there yet. Sometimes it just doesn't show up. Sometimes things don't work out the way they've always worked out. There's lots of times in the markets, I can't name a specific time frame, mainly in stocks, a couple times in crypto because crypto is pretty new. You wait for the breakout season in stocks, and this has happened to me, and just nothing works. Just things move, they come back down, but you don't get the big breakouts. You don't get the monster breakouts. Those are tough years. Those are very tough years, and I've been in those years. I wasn't making money in those years, but I just noticed that nothing was working out. So you're going to have moments in every market cycle and in every market type, cryptocurrencies, commodities, where shit just doesn't work. And what you have to do is roll with that punch. So crypto right now, crypto really hasn't worked long for a minute. I mean, you had a run here. That's a good run. It's a 50% run. It was a little choppy. It wasn't super clean, but it was there. And then now we're in a downtrending market. So, how are we going to handle this? Well, the other day yesterday in the show, we were like, well, we bounced. Let's kind of see how this goes. Well, we closed okay, but if you look, even on the 2 hour, you're not super enthralled with this with this reversal. Now we're back here testing again. So I do think that bias is to the downside, to choppy. I don't want to short necessarily, so I really won't be shorting. But if your inclination is to short, Aram says, what I meant, we never traded gold or silver, but the big money was there. That's why we focused on that market. Yes, exactly. So the whole thing, Aram, and for everybody, the thing is the trend. What's the trend? See, the trend is probably one of the most important things in trading, especially nowadays. It used to be different, okay? It used to be different. There wasn't this hype around trading. There was more professionals, less retail investors. Now there's quite a bit of retail investors because of online trading. It's very easy to trade, whereas before it was not. And so the trend is extremely important. And yeah, gold and silver were on trend. It was a global macro trend. Still is. The trend hasn't died. Let's be clear about that. But technically, we definitely got overextended. And so that's why we moved into there. And I traded it poorly. I traded it poorly because gold and silver move differently. We've talked about that for years. How gold and silver are very gappy, how gold and silver do most of the work overnight. It's just so hard to trade those gaps. And I got caught up in that. I'm sure a lot of us felt that if you're trading the stock stuff with me. So it's a little difficult. It's not easy, and we have to adjust. And I finally, in the end of the day, just ended up doing some pretty low risk, at least for me, things. And I did make money. So I can't complain too much. But, I should have done 20 times better than I did. Literally. I mean, I should have done a lot better. I did everything wrong multiple times, and then I finally did a couple of things right. So, yeah, everyone started talking about gold and silver. That became the sell signal. Yeah, and that's when you look for it, right? That's when you look for it. So, and then when you see my video that says, let's watch silver go parabolic. Right, Loopy? You're like, okay. Well, at least I think. I mean, I'm not perfect. You guys know that, right? No one here is under the illusion that I'm perfect. But I try to come on during extreme moments, right? And if I'm calling a parabolic move, I'm usually decently accurate, okay? I'm decently accurate. And so you're like, yeah, this move is over, right? You're like, the market's frothy. When Randy, Real Crypto, when he pops on a live stream, shit's going down. Shit's going down. So I do want to take that credit. I do want that credit that I do try to live stream during extreme moments. I don't always succeed, especially the past year or two, but extreme moments. But yeah, everyone was talking about it. I mean, people that have no business buying gold and silver talking about it. Not by itself a sell signal, but you made it with technical analysis in the proper context. Very, very powerful stuff. Very powerful stuff. I did? Oh, good. Oh, I'm so glad to hear that. Extreme stream. Oh, I didn't extreme stream it. Oh, I missed out for my extreme stream. No one called me out on that the whole stream. Damn it. I love extreme stream. That's my favorite thing. Of all the things, that's my favorite thing. I love extreme stream. Oh, hold on. Was it a birthday party? Question mark. I had no idea. Great. So we showed up. Okay. So apparently my kid was invited to a party at a pretty expensive like a skydiving simulation place, birthday party, and then I didn't know it was a birthday party, and my wife just dropped him off with no present. Yeah, so there you go. Oh, good job. You sold the same time as me. That was great. Wow, that was good. So let me ask you a question. How did you psychologically handle the subsequent few days? When it kind of, because I'll be honest with you, and I was talking about it when I was doing my shows. I'm like, man, I guess we could keep going up, because the funny thing about this silver rally, and is that look, we held well above the 10-day. This was handled nicely. This was handled nicely. Yeah, I didn't really well okay. So let me tell you what I did. So yeah, I sold, but what I did is I actually sold a call on this AGQ. I sold a call on AGQ at 410, and the top was at 408 or something, 411. Top was 411, so I sold a call at 410. I sold a call at 410. Actually, when it came down here, that call was only up like $20 because the market started bouncing back pretty good. Then it bounced back again, and then it was kind of flat. I actually sold the call. I rebought the call, so I flattened the position. Then I put it back on. I'm like, come on, Randy, you got to stay with it. You got to like I was hyping myself up. And then I bobbled it again. At the end of the day here, it was actually more expensive than when I sold it. So I was actually down a little bit. And I jumped back and I sold at another part of the day. Then I got back in. So I sold the calls again and I held overnight and it gapped up. And the thing about selling calls, I sold the 410s. I collected $82 in premium. So my break even was $492. Was way up here, 492, wherever the hell that is, over here. I'm like, dude, even if it gets up there, by the time, unless it goes really parabolic, like crazy parabolic, I'll lose some money, but it's just, I'm like, no, dude, it's parabolic. I sold the top. Like, I gotta trust myself. And then the next day opens, and by the end, I'm up like that call that I sold for 82 is now worth $5.40. So I'm already up like 98% or whatever it is. It just goes to show you, man, technical analysis works, but at the same time, global macro can trump technical analysis if it really wants to, but it just didn't. And so maybe global macro can't even trump technical analysis. Maybe it's that powerful. I'm a true believer in technical. The guys that don't believe in technical analysis, I'm like, just get the fuck out of my face. We are not living on the same planet. We are not even going to have valid conversations. Because all I'm going to hear from you is rationalities for why things happened instead of being reactionary to what is happening, if that makes sense. So, yeah, I thought about I did close my short a couple of times. Probably lost 10%, but I'm going to make a 100% gain on that trade, that's for sure. Yesterday was one for the ages, though, in terms of sell-offs. Another thing that I struggle with at the end of this day, I did re-enter my short, because what happened, let's go intraday. This lesson's more important than anything we're going to talk about, I think. So we sold here, right? We sold right there on that big upper, the second one, this one, right here. We sold there. Yesterday, or I'm sorry, not yesterday, but Thursday morning we sold off. So I sold, I basically, I'm like, okay, yeah, this thing's definitely done. We're getting a second bout of selling. This thing is definitely done. So they gave me the confidence to re-enter. By the end of the day, I wanted to go short silver because silver's the most volatile because XYZ. And I actually tried. So I did sell the call, but I actually tried to short. I have a cash account and I have a big account. My big account, and then I have my cash account. My big account is my Roth IRA. My cash account is on TD Ameritrade, and I can withdraw money from that at will. In my big account, I tried to short silver. I don't know why I didn't just short AGQ. I'm not sure if it would let me short. Oh yeah, it wouldn't let me short because it's not a margin account. It's not a margin account. You know what I mean? And so I couldn't do it. And I'm like, why the because I never really tried to short on that account in a seriously long time, apparently. So I ended up doing nothing. And then look at AGQ. It would have been up 60%. It would have been up 60. I would have made 60%. So I was going to do about 1.5 position sizes on the short. I wasn't going to go crazy, but I knew it was a good short. I'm like, even in time, it'll be a good short. I would have made 60%. That would have been my second $1 million day. My first $1 million day was the silver long when I exited. That was my first $1 million day. Yeah. I don't think I've told you guys that before. I made $1 million that day. And this would have been my second $1 million day on the same move. So, and I didn't know it was going to dump like that. I knew the move was over. And after this second battle, I'm like, this thing is just done. So, but going back to what I said earlier, I was unprepared to do that. And I spent a good 30 minutes. Trying to figure a way into that trade. And I got so frustrated. I got so emotional. Frustration is an emotion. I got so frustrated. I got so emotional. I just sold that call, which I already had on. I just let it. I'm like, okay, you know what? Fuck this. Whatever. Nothing. The universe doesn't want me to short this thing. And so I lost out on what would have been a phenomenal, an absolutely phenomenal trade. An absolutely phenomenal trade. And I want to say this. Okay? I want to say this to you guys. I'm not doing anything with it right now. I'm not doing it. It's too risky right now. Silver just dropped. What is it? 28%. Like the edge is gone. I mean, it still may drop, but okay. So okay, this is going to be good. This is what I do. Okay, just gonna be honest. This is what I do. I don't know why I said I'm just going to be honest. I'm always honest. But this is going to be return, and this is going to be risk. Right? This is risk. This is return. There's going to be some type of, one-to-one. Is this right? This should be this way. This should be this way. This way? Yes. Okay. Okay. That sounds better. So this is your risk. This is your return. I guess that makes a little more sense to me. A lot of trade. So I'm going to do boxes here. I'm just going to do boxes here. And I'd like you guys to think about what you do and your strategy. And where it sits in this box. Okay? Seriously. So a lot of people like low risk things. So they'll live over here. Okay? They like low risk. They don't want the risk to go up like this, right? And let's be clear, there's different kinds of risks. Let's be very clear on this. And I think this is something, okay, as a retail trader, as an individual trading your own money, the risk that institutions have are different from the risks that you and I have. Okay? So the risk is, so there's random risk. Okay? There's chart risk. There's macro risk. There's the vehicle risk. If you guys don't know what a vehicle is, I'll talk about that. There is cycle risk. These are things I think about all the time. All my capital in one trade? Yeah, everyone's done stupid shit like that. Absolutely. Absolutely I have. Not for very long. And not consistently. No, I've settled down to 20% position sizing. And if I'm just trading like a Soxol or AGQ or an ETF, I'll do 50% of the account, easy. I'll do 50%, no problem. No problem. So these are your different kinds of risks. All right. Oh God, you know what? This is taking me down a really cool rabbit hole, but I don't know if I can do this effectively. Like I don't know if I can really do this effectively. No. So with NVIDIA, I'd have to go back and look at my NVIDIA trade. I think I was almost 50% in my account in options and 50% in just the stock. I didn't even do NVDU because I really wasn't thinking about it. I may not have known about it at that time. NVDU would have been a monster trade. On top of that, I'd have made fucking tons of money. But on the NVIDIA trade, I was half options and half NVIDIA stock. That's what I remember. What the facts are, maybe a little bit different, but I was really heavy on the NVIDIA trade. That was just the most obvious trade. Other than the Tesla trade was pretty obvious, but that my strategy was pretty new, and I wish I would have handled it better. I don't know. I didn't handle SanDisk very well. Anyway, let me talk about this. This is much so. Don't fantasize about all in on one trade bullshit. Okay, trading should not be fun. Let me just be clear. This should not be fun to you. You should enjoy it. Okay, but it should not be fun. It should be strategic. It should be fun in a logical way. It should be fun when you win, but it shouldn't like be fun. You should be like, oh man, I'm gonna get all this on one trade. Like that's like gambling fun. You don't want to do that. Okay, back to this. So the reason I'm doing this is I was trying to explain why I don't want to short now in silver. Okay. All right. So I like to live where I have low chart risk, low vehicle risk. Well, I always have high vehicle risk, but that's actually, I'm working on that one too. Low cycle risk. Ideally low random risk, but you really can't control random. And low macro risk. Okay. Boom. Oh, here we go. Okay. So there's also types of reward. Yeah, 50, I mean, you just have, yeah, never, all in isn't good until you really know what you're doing. Okay. So obviously this is the return side. So the percentage of return is going to be high over here, right? It's just anything up here, the percentage of the return is high. Anything down here, the percentage of the return is low. Okay, those are your rewards. So I have the risk. I just figured I'd put something with the reward on there. Okay, so options are up here. Leveraged ETFs are up here, right? And then you get normal returns, which are just like ETFs, which are like dead in the middle, okay? You know what I'm saying? Like we're here. We're kind of here. So in terms of return, you have ETFs as a strategy, you have leveraged ETFs as a strategy, you have options as a strategy. A lot of people want low risk. All right? A lot of people want all this low risk stuff. So you're stuck in this quadrant. You're stuck, it's not even a quadrant. You're stuck here. You're never going to get a good return. Okay? You're never going to get a good return. The problem is these risk types, people don't understand these risk types. Does that make sense? If you're to go talk to a money manager in a bull market, you're like, okay, what's the cycle risk right now? They're like, what do you mean? What's the market cycle risk? He's like, what do you mean market cycle? He's not going to know that. You say, what's the risk in trading this? So a vehicle is a stock, an ETF. The vehicle is the thing you actually shove your money into and hope it drives you somewhere. That's the vehicle. The instrument is what you're trading. So we traded gold using the instrument of leveraged ETFs. Okay, does that make sense? So you say, what's my vehicle risk here? They're like, what are you talking about? What's vehicle risk? Like they don't know. They won't know that. When you say, what's the stock risk? Like, oh, well, we don't know what the stock's going to do. They're going to say, but the macro looks good. Okay? That's what they're going to say. And you're like, oh, what's the chart risk? They're like, chart? What do you mean chart risk? What do you mean? And you're like, so they only know about the macro. These fucking retards only know about the macro at a super high level. They can't, a lot of them can't even tell you that. So when you look at these risks, these guys, they're saying this is risky, and these risks are here all the time. Okay? They say these risks are here all the time. And things are going to be different. And during different market cycles, your cycle risk could, like right now in crypto, your cycle risk is extremely high. Can we agree on that? Your risk in Bitcoin going long is extremely high due to the market cycle. The chart risk is extremely high. The random risk due to those factors is extremely high. The macro may be neutral because people think Bitcoin could be a hedge for the dollar. And your vehicle risk, trading Bitcoin by itself, is more risky than other things, but leveraged ETFs would give you more risk. So right now, I would say your risk is pretty high. And if you're going long, your return is pretty low, right, in terms of the risk. But most people won't quantify it like that. They'll just simply say one thing. They'll say one thing, but they don't think about this. So when I get into that silver trade, when I flipped it, okay, I exited because I was in leveraged ETFs. All right. So my risk trading leveraged ETFs, I was also in options actually. I did have an option for silver long, but we were in a parabolic move. So my cycle risk in a parabolic move for going long was low because it hadn't topped yet. So the cycle was a parabolic move and the risk was low because we were in the middle of the parabola. My vehicle risk, options, okay, yeah, it's a little high because it's options. I accept that risk. Macro, everyone's buying metals, so that's a low risk. Chart, middle of a parabolic move, very low risk. And random shit can happen. Okay, so I got 3 out of 1 in my favor. Right? So I'm able to take more return risk because of these risks are low. Okay, and this is where I live. I live right here. Like I really like to live here. I want these returns, and I want to accept. I think the risk is lower. You may say that. So okay, well here's the thing. My initial trades in gold and silver were like this, and then they ended up kind of being like this. They ended up being like, because I screwed up all my original gold and silver trades. Okay. Well, we can look at the dollar. I'll go there. We're up 1%. Let me finish here. Let me finish here. Yeah, I mean, I'm still nervous about that, Mike. I haven't really, I haven't made any moves. And with gold and silver collapsing, that's actually good. That's good from a macro perspective. Let me tell you, someone had a Reddit post that said, he's like, we're making a butt ton of money in gold and silver, but are you worried that this is going to fuck up the world? And I was like, it's a pretty ominous sentiment. So when you see silver go down like this, we're like, woo, maybe we got another day or two to live. So I'm a little bit less anxious than I was. But the problems haven't gone away, obviously. So, yeah, that's the thing. You're in the pound? Okay. Yeah, we'll do that later. But I think this is an interesting way to look at risk and return, okay? Because here's the thing. When you've lowered the risk, when you can eliminate these risk cycles, when you can eliminate the chart risk, which no one even understands what the hell that is. That's like, hey, how's the fucking chart look? I mean, if you've done any charting, it's relatively straightforward. If you can get rid of the macro risk, which you obviously have no control over, but if the world's just doing its thing, there's no macro risk, okay? There's just no macro risk. It's a little weird right now. And the vehicle, you're always going to have, if you're just trading stock, your vehicle risk is relatively low, all right? And if the chart looks good, then it's better. If you have options, you have to understand your risk in your option. And that's a much deeper conversation. And the cycle, where are we at? Like right now, I don't want to buy NVIDIA long because the market, everything's really high. I think the cycle risk is high at the moment. So when silver topped and I sold silver, the chart risk was high for my long, so I sold. The cycle risk was high for my long, so I sold. And my vehicle risk was really high because I did have some options, so I sold. Now, flip that on its head. Flip that on its head. Then this goes back up, so I have a new trade, which is now I want to short the silver top. Okay, well, now you're looking at shorting. What's your cycle risk? Pretty low. We just topped. Like we just topped. If you wanted to sell an option, what's your risk on that vehicle? It's actually low because the volatility makes the option premium go up. So if you were to buy an option, it'd be very expensive. I actually looked at some options. So keep in mind, AGQ went down 59% yesterday. If you'd have bought a put, you would have only doubled your money, which sounds crazy because AGQ went from $400. This is still the AGQ chart, from 400 down to 300. So there was so much volatility built in that if you bought the put, that was a horrible choice because your vehicle option is really high because there's a ton of premium. So by selling the call, by selling a 410 call, my risk was 492. So my vehicle risk was low. Cycle risk low, vehicle risk low, macro risk still there. Macro risk is still there, but our cycle risk is lower. Vehicle risk is, if you've noticed, we can't ever get rid of all of them. For the most part, one of them sticks around. And our chart risk, topping on a parabolic move, that's pretty low risk. So I can take a high return trade due to my low risk. My risk being low, trying to gain the most return is the game plan there. Okay, is everyone picking up what I'm trying to put down here for you? You have to, with a risk-first approach, you can deal with how much reward you're able to get. If you're taking on a lot of risk, if your chart risk is high, if your cycle risk is high, but your chart risk is relatively low, your vehicle risk is relatively low, you can take a leverage ETF trade. You know what I'm saying? So you have to take this risk-first approach. So when it comes to the gold trade, when it comes to the silver trade, understand the macro. And we were talking about gold and silver. We talked about the whole freaking time. Before it broke out, when it broke out, after it broke out. Did I screw it all up? Yes. I screwed up so royally, you'll never even know. I was still right. I just traded like a pussy. So, anyway, am I beating a dead horse with this thing? I tend to beat horses a lot, usually to death. And I feel like I could be beating a dead horse with this. You guys are still hanging out. That's good. So, I think this is extremely important. It goes into dip buying. It goes into, this is a whole framework around investing. In reality, I actually like it a lot. I think I'll build it into DaVinci. I'm going to build this into DaVinci. So by focusing, so the things we can generally, I think we can win is if we have low chart risk, low cycle risk, low macro risk, and you can do low vehicle risk. I've actually, I'm getting to the point, I hope, and this obviously the markets have to cooperate. The markets have to make the move. I don't make the move. When you look at silver, the vehicle risk on silver, where I entered silver here, was extremely low. So I even took a low vehicle risk trade, right? I took a low, it's kind of hard for you guys to see there, but when I initially bought gold and silver, I did it in a great spot. So my vehicle risk, my option cost was lower. There wasn't volatility built into the option yet. So my vehicle risk was lower. Buying an option up here is insane. Absolutely insane. So your vehicle risk, probably has the most impact on your trading. Because if you're trading options and you trade options wrong, as you saw with shorting this, buying the AGQ put, yeah, you would have made 100%. But what if it didn't drop that crazily? What if it was just chilling up here? You'd have been destroyed, absolutely destroyed. So that was a high vehicle risk, right? It's like it doesn't matter what racetrack you're working on. It doesn't matter what size engine you have. It doesn't matter. I'm trying to find a good analogy here, but it's evading me. But if you have no brakes, why go around the track? If you have no brakes, you still need all the other stuff. Anyway, quantify your risk before you consider a position. And if the trade is gone like it is now, I'm not going to short silver now. Just because I feel a little bit like I'm really good at my job, and I traded this relatively poorly, or very poorly in gold's case. Just because I traded it poorly and I was right about this and right about this and right about this doesn't mean I'm going to be right down here. Like all of my risk meter, risk went down, and then it went up just as sharp as this chart went down. Does that make sense? So if this is my risk tolerance, I'm way out of it right now. I'm way out of my risk tolerance right now. So there's no trade to be had here. This is a dead trade. It's dead. You let it be dead. You don't go fucking the body. Okay? You just don't. You don't. It's cold. It's not going to be fun. And knowing your luck, it's going to get pregnant. Okay? I'm just going to say. Then you're going to own child support to a corpse. It's going to be awkward. Can we talk about how we can hold the trade sometimes? You're in an option and you're in an option trade, the time is against you. Yeah, all you do is exit if it don't act right. You exit if it doesn't act right. Be a very selfish boyfriend. Selfish husband. The bitch don't act right, kick her to the curb. Point blank and period. Now that does cause issues with me and gold, like how I handled gold. Those rules caused what would be the craziest trade of all time for me, at least so far in my career, probably of all time. This gap, which I did sell, would have sold again. I bought down here. I bought gold on that day right there. I bought really, really well. And I sold there, and then I got back in, then I sold, and I got back in here, and I sold here. And even if I would have held that trade, I would have done exceptionally well. So going back to the risk factor, there was vehicle risk here. The macro wasn't at risk. The macro was still, we didn't know it was going to come back 2 weeks later, but sometimes holding an option 2 weeks is devastating. So my rules basically tell me I had to exit. So what could I have done differently here? I still am not very clear on that, Aram. Gold, maybe I would just have to accept that risk because the macro was so amazing, and based on what silver was doing, which was amazing. Those other factors probably would have led to a holding of the gold, probably, but it's difficult. I'm not going to say it's easy, obviously. Silver was different. Silver didn't really shake you out much. It shook out here, and I made 600% from there to there. Imagine what I would have done. You know what I'm saying? Like, although I think I had this trade that I got 600% on. This actually expired December 26th, so I still would have done super well. Yeah, I would have. So that was 600%. That would have been 2,000% probably, maybe more. That would have been a tremendous, tremendous, tremendous trade. And I sold that. I was up 800% at the beginning of the day, 600% by the time I was there. If I would have just waited the day, it's just a mistake. It was a mistake. So gold was trickier. Gold was trickier. Yeah, this move here was trickier. That could have been when silver. No, not really. Oh yeah, start of a little consolidation. So, gold is trickier. I mean, the thing to do, I think, is just, yeah, you just, I don't know. Sometimes you just aren't with it. I mean, don't get me wrong. I still did good. I still made money. Account went up. I can't be too mad. I really can't. Um, I really can't. So, Mexican Charlie Leo, if you're still with me, you did say earlier, you said I need to become a trader. I've always just been a lurker here. When you do live streams, do you have tutorials for noobs like me? Um, I actually don't. I actually don't have tutorials. I kind of just gave you one though. I mean, I do have my Power Hour service. Um, if you want to join the Power Hour, then you'll get exposure to that, and then we do these Saturday live shows. They're supposed to be private, but lately I've been doing them public, just kind of because the market's been a bit more exacerbated, um, and I think it helps you guys out when I do that. Maybe bring some more people into the Power Hour, but it's not the Power Hour isn't something I usually advertise. I'm sure, as you know, but yeah, it kind of is the tutorial. It's a tutorial for sure. I mean, this is high, what I just did. I've never framed it like that before, but this is really good. This is actually kind of how I think, but I've never kind of codified it. Hey, what's up, Phil? How you doing, bud? I've never codified it like this before, but this is generally how I think. It's a risk first approach. You know, there's probably a couple other risks. There's probably seasonality. So you can put seasonality in here. There's a number of risks, but yeah. But it's all about taking these high reward, low risk trades. And that's what technical analysis gives you. You have to understand the macro. You have to understand options if you're trading options. You have to understand futures if you're trading futures, right? You have to understand the vehicle you're trading. And you don't get away with being stupid and winning and trading. It doesn't fucking work. So, but yeah, I live right here. I'll let everyone else do all this shit. Y'all do that. My goal is to double my account every year. That's my goal. Okay? So far, since I got profitable, I've exceeded that goal. We'll see if it happens next year. I don't know. I don't know what's going to happen. Well, this year, I guess. This year. Yeah, in my cash account, what am I up this year? With gold and silver. 30%? 30% in January. That's funny. Yeah, 30%. That's basically all silver. If I would have traded it better, that should have been a triple. That really should have been a triple. Yeah, it's not a big group of people. Let's be honest. It's a small group of like-minded individuals for sure. But my job, and I really want you guys to be successful. Yeah, so if this is something you're interested in, I mean, the only thing I can say is that, join the Power Hour and just show up on Saturdays. Now, I do have some videos, which is kind of like a trade school. I haven't curated them. I've got a lot of other things I've been focused on than keeping my whole thing. Higher high or lower high? Well, the move's done, Phil. What more do you want? Jesus. Talk about being greedy. I honestly, I haven't really even thought about it. It's been such a whirlwind. Did you see the live stream, Phil? I'm gonna pat myself on the back a little bit here. Did you see the live stream, Phil? Go back when we're done here. Go back to the channel and watch my Silver Parabolic 2026. Go watch that live stream. If you didn't see it, it's pretty fun. But this is a decimation. This is a 3-foot hole in the Hoover Dam. Right here. I mean, you generally, okay, that's better. SLV, that's leverage. That's why that looks crazy. Okay, log is on. Okay, it doesn't look as bad now. There we go. Log scale is on. Okay, a lot more reasonable. We're still above the cup and handle. Yeah, we're still above the cup and handle. Well, there's definitely nothing to do. So I said earlier, global macro can trump technical analysis. I do think it's possible. Now, there isn't a lot of historical basis for that because I don't really have that'd be a research project. So in other words, if China wanted to buy a ton of silver, if they wanted to buy this much silver, pretty sure China could. If the US wanted to buy this much silver, pretty sure the US could. So all technical analysis is the analysis of accumulation and distribution on a chart. If somebody wants to come out of nowhere and accumulate, first of all, it's called a breakout. Second of all, they can do it, right? It's within their right to do that. If India wants to come in and buy a crap ton of gold because they got more temples to build and they want to put layers of gold on their temples, boom, they're gonna go buy gold. But these volumes that are being printed on these charts, and the funny the funny thing about it is, we always say just look at the charts. Always, it's just about the charts. It's a little scary to think that technical analysis can be overridden by macro factors such as what I've just mentioned. But if technical analysis is what it says it is, which is accumulation distribution, these trades are done. Now, they're at least done for the foreseeable future, which is a month. You know what I'm saying? Like, they are just donezo. There's donezo as donezo gets. Like, there is done as done gets. It doesn't get much doner than done. It's like, it reminds me of when I left my pulled pork, my pork butt on the grill for too long because I read the wrong recipe. That thing was done. That thing was done. So this is a good time, because you just lived it, to go through this chart and try to remember what you were thinking kind of day by day, leg by leg, moment by moment. And if you weren't involved, why? Answer that question, Something Mike said, I think was it last week, Mike? We talked about gold last week here and going to gold. You said you were nervous about that. Well, that's why you're nervous about that. If the chart stabilizes, we talked last week about, hey, if the dollar does devalue, if things do kind of, start to take a huge shit for the U.S., which is possible. We don't know what's going to happen. I said gold is very likely the place to park money. So this is not technical analysis. This is global economic theory. It's just theory. When gold's, finds a floor, it'll be a new floor. Okay? It'll be a new floor. Do you accumulate on those dips? Maybe. It definitely could. Oh, checkinvestors.com. Yeah, I don't know if we got a distribution day or not. It's over here texting me and shit. That's funny. Send me a picture of my kid at this iFly place. It's pretty cool. What I think will go up, down if there's a recession this year? Why? You want it? Why, Loopy? I'm going to start asking that question. I want to know people's motivations for asking me stuff like that, because I get that. And not that I could even have any insight into that, but the question is why? Like, I'd like to steer you to a better direction, I guess. And we can talk about that. Let's see. $60 to 80%. So 6 6 distribution days on the NASDAQ, 3 on the S&P. Exposure 60 to 80%. So they dropped it back down to 60 to 80. I guess we got a distribution day. Yeah, we haven't even really talked about crypto much. It's just, oh yeah, we're going down worse right now. Oh yeah, there we go. This is why you don't buy those dips, because they keep fucking dipping. Buy a better dip. If you want to buy a dip, buy the right dip. Period. And it better not be fucking ranch. Don't bring ranch around me. You're fired. You're fired. So this is tough. I mean, none of us have gone through this before, Mike. So let's go back to stocks real quick, and we'll look at the dollar. We'll look at the Great British Pound versus the dollar, because that's kind of what you're dealing with here. So let's go to the weekly. We'll take a long. So the Great British Pound looks like it's generally been losing some steam to the dollar. We could have just broken that trend. There's quite a bit of volume here at the low. So that looks like it's put in some kind. That looks like an inverted head and shoulders pattern. And so, I mean, it looks generally pretty safe. It looks decently safe, Mike. I get what you're saying, though. So yeah, I don't want you to have a 30% swing either. I mean, 30% is pretty big. Yeah, the daily is a little weird. I agree. I think yeah, it's tough, man. It's tough. I just say follow the charts. That's all I say. It's just this one looks pretty good. It's got a good volume signature too. Look at this drop. Very low volume on that last drop right there. So, I mean, I think you're in a good spot. According to that. The dollar, last time I checked, was in a bear flag, but it was kind of bouncing up. Yeah, there's the bear flag. There's it bouncing up. I had a measured move, but it looks like it's rebounding some. So, I mean, we'll see. You can always switch. I mean, the moves, I think you really have to define your goal with trying to figure out a default currency to live with. All I'll say is this. Any of these will be less volatile than gold right now. You know what I mean? The 1%, 2%, typically really big moves for currencies. So I don't think you can go wrong, especially because gold just sold off. The way that gold sold off, the way that silver sold off, it does look like we've reached a pivot point, and we have a solidified high. So I think a lot of that crazy risk is mostly off the table. Yeah, I mean, compared to where we were last week questioning things, I think it's better. Essentially because they sold gold off so hard. They sold silver off so hard. Oh, speaking of which, let's look at the metals. Oh, damn. Wow, look at platinum. They sold everything. Hey, you might want an ugly t-shirt? There you go. Man, they sold off everything. So I would view this as a positive. For that kind of stuff. Yeah, I feel a lot better now. So, yeah, I mean, pound, dollar, whatever. Whatever. I just hope we don't really have a big reversal back to the upside. Oh, a big stretch. Oh, I had to get up early. My kid's in his fancy school. He had a presentation Saturday, 7:30. So I had to get up. All right, let's take a look at some indexes. Anyone want to talk about crypto at all? Just we can analyze something. Mike, your 60K is underway. We just saw that. So NASDAQ, we just mentioned they had a distribution day. S&P did not, I don't think. Russell rolled over. Transports holding pretty tight. Apple, Tesla, Soxel. I did sell Soxel. I really didn't like what anything did on Friday. I just exited everything. I'm like, screw it. I'm done. I like being cash. It's really cool just to see the money sit in your account. Because then it becomes your freaking money. If you never go cash, you never actually own it. Google's looking pretty solid here. Earnings are coming up this week. Palantir's dead. Palantir's dead. AMD earnings on Tuesday. That should be interesting. ARM, garbage. ASML, tied above the 10-day. SMCI. Reddit. You're out of Reddit, right, Aram? Chart risk high, my friend, up here. Chart risk high. ExxonMobil looks good. Man, too high to do anything with, but that's high chart risk. What? What the fuck? You're not out of Reddit? Oh, god damn. Dude, I was getting mad. I'm about to fly out there and smack you upside the head and fly back. Oh, good. Woo, I can breathe again. I was getting mad, dude. I was like... Oh, good, good, good. Okay. I just had to double check. Alright, ConocoPhillips, Backblaze. Backblaze looks like garbage. Amazon, choppy. Meta up 10% is up. I don't know. I kind of view that as a problem. That was a little bit of a sell signal. Didn't they just announce that we're going to spend $130 on, or $130 billion on AI? Yeah. Facebook drastically increasing its investment in AI with plans to spend $135 billion on AI infrastructure in 2026. Holy crap. What are they... Spending 130, I don't know, but that just seems crazy. All right, we're going to ask, how much cash? I don't know, Rob. You always tell me you're in cash, and you always seem to have a position the next day, so I don't know. Free cash flow. What are they? How are they going to get that cash then? That's crazy. I think Zuckerberg is going to. That's crazy. $135 billion. That's insane. All right, Comfort Systems, and then Oracle, still a huge piece of trash. I can't believe AGQ's down 60%. That should have been all profit for me. These names, these quantums are just done. Just done. So good stuff. We're going to get a nice rollover. So here's the thing. Here's what I hope I get. And see, I don't know how this is going to go. If they're really spending that much money. I don't see how Soxel is going to go down that much, but I really wish Soxel would go down again. I'd love to get that 400% trade down here from this, $10 level. How great would that be to do that again? And actually do it this time. Or buy the option and get 2400% like we talked about a couple weeks ago. Pretty cool stuff. Let's talk about space robots. I think a handle here would be amazing. big cup, maybe a handle. I don't know. Things just look extended right now for the most part. I think Lockheed Martin's in a big growth phase, obviously with all of its defense spending, but it's really high right now. So some type of consolidation that has a lot of chart risk, it looks like. Carmen rolled over. My buddy SanDisk. So let's talk about the trade that wasn't. Holy crap. Holy crap. That would have been... My target was 500. This thing got up to $676. That was the high. That was the high. That would have been so much money. So much money. Man. Micron. That appears to be a chink in the armor. A big red candle closing towards the low of the day. It's still above the 10-day, but how long is that sustainable? They can go for long. They can go for a long time, but definitely not buyable up here. Very high chart risk entering now. Ugh, sorry I'm yawning over here. It's catching up with me. Oh, SanDisk? Yeah, SanDisk chart was beautiful. You don't think I'd hold SanDisk? Well, I didn't. That's that was the problem. But it's above the 10-day the whole time. I should have just held. I had a garbage entry here, but I should have just held. We saw it here. I should have bought the next day because my vehicle risk would have been lower. It seemed high, but the run-up was massive. The base was tight. The chart risk here was small. The vehicle risk was not small. Everything else was small, though, and I should have done it. I should have done it. I should have bought here, but I bought here instead, and I should have held here. Instead, I exited and missed out on a great trade. I'd feel really good about myself if I'd have got this trade and missed gold at least. I don't know. Anyway, woulda, shoulda, coulda. Western Digital. Some distribution up here. You look at Thursday on earnings, stalling candle, and then a reversal candle on Friday. So that could end the Western Digital run, which will likely end the Seagate run, which has had a crazy run. I don't know what you mean by that. You were asking for sell of and it's coming next trade. I'm not sure what you're saying. If you're regarding SanDisk, I could have said anything on SanDisk. I don't know. That thing threw me for a loop. I did not handle that trade well. And I really, really like that chart too. That was better than IonQ, and it shows. Yeah. Oh, sell off. Yeah, this has been a weird beginning to the year. I think I've said this before. I think I misread the December or the January 2nd rally in the markets. I just misread it. Just completely. Yeah, I was too nervous for whatever reason. So Bloom Energy, not bad, not good. Earnings coming up. Can't do much about that. AVGO is starting to get a little interesting. It's getting a little tight here. It'd be nice to see it pop above the moving averages. Qualcomm's in danger of doing something pretty bad down here. Earnings are coming up. That's probably going to be your catalyst on Wednesday. And a bunch of crap down here. APP, that's not good. Down 16%. This PLG never really worked. I never got into it. It was an interesting trade, but I didn't enjoy that day, so I just kind of stayed out of it. It's not generally my trade, and all these are off the table as of right now. Yeah, I think there's a lot of risk in the market right now. I think the market, going back to our risk chart, I think our cycle risk is high. I think our macro risk is put 7 question marks behind it, because who the hell knows. Obviously, Bitcoin's selling off as we're speaking. Yeah, so That's a little tough right there to really do anything. Crypto is just in a garbage spot. XRP took out the bottom. Solana. I guess we'll end with crypto. I got nothing else to talk about. I need to go take a damn nap. Man. Yeah, I guess hyper popping was your exit signal in crypto. It's always something like that, isn't it? Everything's down 10%. Look how even this is. 6%, then it's 10, 9, 8, 11. Tron at 2, which is weird. 11, 8, 12, 10, 5, 10, 10, 9, 11. Like everything's down 10%. And USD pairs obviously being decimated. There's just nothing. I think shorting, if you want to short something, I don't have any amazing suggestions. I think, Ethereum seems to be pretty good. And you can pretty much short any high. And put your stop at any high, right? So like even that high right there shouldn't be breached. If not, that's a high. That's a high. If you want to short, but I don't know. I'm just going to stay out of the mix and enjoy my gains. All right, guys, that's all I got for you. Any last questions before I head out of here? I just really think there's not much to do. I think we just saw once in a decade move in gold and silver. Could it happen again in a month or two? Yeah, because our macro risk is relatively high still. So we'll see. Short Ethereum? No, just if you want to short it, just short the ETHT. I don't think there's a short Ethereum ETF though. Yeah, I always look for stuff like that. Like I was looking at how to short silver and a GLL, I think was it, and it wasn't working for me. So I didn't do it. And I would have made 60% overnight. That'd have been great. All right, everyone. Hey, you guys have a good day. Next one probably will not be public. So if I don't see you guys next week, then I will see you when I see you. Have a great day. Bye-bye.